This is Eric Mwatha with Mwatha.com. Another rethink video. This time we are going to be taking a look at the Netflix hourly chart primarily. Now, what I want to talk about here is the fact that most investors spend most of their time, and rightfully so, looking at the daily charts and sometimes the weekly charts. But most investors spend most of their times or their research time looking at daily charts, I believe, especially like the 6-month daily chart and the 1-year daily chart. And there's nothing wrong with it. And most investors have been taught to believe that the RSI is a measure of how oversold and overbought a stock is. But I've always tried to show you that the opposite is true. The RSI is a measure of sentiment. In other words, take a look at this example here. When Netflix was trading with the RSI there, if you use the traditional measure of RSI being overbought, you would have sold the stock here at 150. Stocks trading at 195. Okay? But what this RSI is really a measure of sentiment, how bullish the stock is. Or another way to look at this, the RSI is a measure of how much the people who own the stocks are willing to add on to their position, or are willing to sell even more after they've sold during a sell-off. So when the RSI is trading at this level here, it just tells you that the sentiment is so bullish that even people who own shares are adding on to their position. It's a measure of sentiment and nothing more. Once you understand that, then you should not be scared of owning stocks that have their RSI at what is traditionally thought to be oversold or overbought levels. Now, I want to switch gears here and go back to the idea that most investors just look at price. But my thinking is, even though they say that price is king, that's true. But really the ultimate decider of where a stock or a market is going is the underlying sentiment. The only thing that changes in a stock is the sentiment. Sometimes their products don't change, their services don't change, but how come price keeps moving? It's because day to day, hour by hour, the sentiment changes. Now, there's something else here in this rethink video I want us to take a look at, and it is that this level on the Fibonacci numbers 38.2 and also 61.8, because I think investors are very good at using this Fibonacci numbers when it comes to price, but they don't use it for the RSI for some strange reason. But if you learn to use it for the RSI, then the market starts speaking to you. Let's take a look at this example here, and I'm just going to make it as generic as possible. You'll look at Netflix here, and you're going to notice that this green line is where I draw roughly where the 38.2 is, and you'll notice that every time the market would hit that level, remember, I'm trying to simplify this as much as possible, the stock would bounce. It made a low there and bounced after hitting that 38 level. It bounced on that 38 level and immediately back above it, which corresponds to that low. Same scenario here, another buy point here, which is here. Another, it came very close there with a double bottom there, which corresponds to that low, and it moved higher. Came very close there to 38.2, which corresponds to these lows here. And again, notice that it came to this, exactly touched that 38.2 level, precisely on that point, which corresponds to those lows there. And you can see in each instance, the market moved higher. So there definitely is something to do with that Fibonacci level. Also, let's take a look at when the stock was moving higher, every pullback. Now I'm going to define a pullback as every time the stock would pull back and move below the moving averages here. Like for example, it moved below the moving averages here. It would move below 61.8 here, and we had a sell-off. It moved below 61.8 here, and we had this consolidation. And it's only until it jumps above the 61.8 that it breaks out here again. Notice that it would stall here, which corresponds to that low or that movement lower. And what is important is that this latest pullback here, after this recent high, comes after the stock breaks this level here, which also happens to be about the 61.8. Okay, now what I want us to look at is right now the stock has made a high of 195, and in making that high it seems to be stalling and moving above and back below the 61.8 level. That suggests to me that this high for today at about 195 could be a short-term high in the stock, and I'm only using the hourly chart and the 61.8 level and the 38.2 level to tell me what's going on here. Now, because markets are very confusing, is if we take a look at this stock from a weekly chart, you'll see that the stock has its RSI way above the traditional overbought area. In other words, for me, what this tells us is that this is a very powerful looking stock. If it breaks out above weekly closing highs, it has justification because the sentiment is so bullish. Even people who own the stocks are willing to add on to their position. So this is a measure of sentiment. So even though the hourly charts is showing us signs of pullback, the weekly charts are colliding with that sentiment and saying, if the price breaks out, do not ignore the potential for this stock to continue pushing higher. Now, my reasoning here is that if we take the monthly view, this is an all data monthly for Netflix, you'll notice that, and I spoke about this in my previous video, that this 61.8 level is a level where the stock has been either stalling, like it stalled there or here, or it's a level at which it would break out and move higher, like here, bounce, and then it bounced off that level there and took off here. Okay, so now we see it coming back and very close to 61.8, and my thinking is that between the hourly charts and the weekly charts and the daily charts, all these forces are opposing each other. But if you're a trader, if that stock breaks below that 179 level and rolls over and you have an RSI looking like that, which means resistance, like it did here, you want to sell the stock. So with all that, I'm saying that we need to look at the RSI from a totally different perspective. The RSI has levels within it where you have Fibonacci numbers that tell you when a stock is peaking, when a stock is oversold, and it's not the fact that it's trading above 70 or below 30 that determines whether to sell or buy. Because those levels, like for example, anybody who sold the stock here just because it moved above 70 on the monthly made a major mistake, because the stock was a buy, a definite buy, and that's why it took off, and it would stay in that strong bullish level, very bullish, for more than a year and a half. So the point is, the RSI is definitely not what people say it is. The RSI is a measure of sentiment, and if we understand the critical levels in the RSI, which happen to be 50, obviously, 38.2 is another critical level on the RSI, 61.8 is another critical level on the RSI, and then there are other secondary levels which are very important, 69.1, and my work goes into detail about this, and also 30.90 on the RSI on all time frames. The more you understand these numbers on the RSI, the more stock market tends to talk to you. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. I am out.